All weekend, Twitter's been abuzz with the story that Credit Suisse is on the rocks. Apparently, senior Credit Suisse executives spent the weekend in the office calling up big clients, counterparties, and investors to reassure them after the bank's CDS spreads blew out on Friday. CDS are derivatives that offer protection against a company defaulting on its bonds. If we look at the stock price, it's down almost 60% year to date, which seems bad, but that is in US dollar terms, and we know that the dollar has been very strong this year. In terms of Bitcoin, which people on the internet tell me is the best money we've ever had, it's about flat year to date, so that's good. We've seen a lot of volatility this morning in the stock price. Initially, the shares fell as much as 12% before turning positive and finally closing up on the day. So is the world ending, and is Credit Suisse the Lehman Brothers of 2022, as some people on Twitter would have you believe? Well, a lot of the turmoil that we've seen was sparked by a memo late last week from the bank's CEO, in which he tried to play down speculation surrounding the bank's overhaul plans, which he expects to announce near the end of this month. I'd note that it's not on Halloween, though. I think it's a day or two before, just because it's probably never a good idea to schedule big corporate announcements for dates like Halloween or April Fool's Day. But in the memo, he argued that the bank's capital levels and liquidity are strong, but he said that the bank was at a critical moment. A little PR tip for bank CEOs: as accurate as such a statement might be, when you start emailing staff to tell them that your capital and liquidity levels are strong, it just doesn't look good. Additionally, when a bank calls its customers on a weekend to tell them that nothing has gone wrong, that can spook them a little bit. Okay, so I've made so many jokes about Credit Suisse on this channel over the last few years that I feel a little bit bad about it. I have a few friends who work there, and I'm not sure that they're talking to me anymore. Credit Suisse has been scandal-plagued over the last few years. There's been Archegos, Greensill, Mozambique tuna bonds, Bulgarian money laundering, corporate espionage. They've kept themselves busy there at Credit Suisse. There's also been a lot of turnover in senior positions at the bank, but just because it's not a great bank doesn't mean it's on the verge of bankruptcy. The CDS prices that everyone's been talking about tell us that the market is pricing in a 3% probability that the bank defaults in the next year and a 20% implied probability that it defaults in the next 5 years. A 3% probability is not exactly the Grim Reaper knocking on the door. The fact that the stock is down a lot this year doesn't really imply a looming bankruptcy either. The stock price is down roughly in line with how much earnings expectations have fallen over the same period. Banking analysts came out over the weekend to say that things are not too bad at Credit Suisse. The liquidity position is very healthy, according to Citigroup, who go on to point out that we see the current move in credit spreads as an inconvenience for funding costs. And that really is the biggest issue. If they do need more capital, it'll be expensive to raise either in the debt or equity markets. So we probably don't need to worry that Credit Suisse is on the verge of bankruptcy, right now at least, due to movements in its stock price or credit derivatives. If this is a sign of looming bankruptcy, Deutsche Bank, Commerzbank, and firms like General Motors have similarly wide credit spreads. Does this mean that you should invest in Credit Suisse? No, that's not what I'm saying at all. The stock reflects how badly the company has been performing in recent years, and we have yet to see if the new CEO has a good plan to turn things around or not. The main lesson here is just that you shouldn't take investment advice from people on social media. Of course, if you did do that sort of thing, you would most likely have already lost everything buying cryptos recommended by Kim Kardashian. Thanks for watching, and if you haven't seen it yet, you should watch my video on the vaporware salesman next. See you again soon. Bye.